morning, everybody. Thank you for joining us today. My name is Ed Main, Director of Insurance Sales here at Aegis. We're going to go ahead and get started. I still see people logging in, so we're going to take it a little bit slow here at the beginning. I'm going to go ahead and start this off, but we are joined by a special guest today, Robert Large, our Senior Vice President of Product and Marketing.
Good morning, everybody. Thanks for joining us.
Yes, thank you. So what we're going to do today is talk a little bit about estimating dwelling replacement, talk about kind of the industry as a whole, and look at some demos that we have on our internal site, dig a little bit deeper into the 360 tool itself, and show you some tips and tricks inside of the replacement cost calculator so you can better understand how we look at the replacement cost itself. So some of the discussion topics we're going to have today, we're going to talk about inflationary increases on both construction costs, materials, and labor. We're going to look at demand surge, show you some news reports, policyholder frustration, which we understand, initial strains, and industry after large-scale wildfire events, which is an interesting time to be talking about it because there is a very large wildfire or two up in Northern California right now that I'm sure you guys are aware of. Regulatory requirements here in California for estimating dwelling replacement cost value. We're going to talk a little bit about that. Verisk, which is the vendor for 360 Value. We're going to look at some of their information and how they put together these replacement cost numbers. And finally, we're going to summarize some key points and answer any questions that you may have. And just wanted to kind of remind everybody here today that at any time, we do have a question section down below. Ask any question that you have. We're going to do our best to answer those as we move through this presentation. If we happen to miss it, we will circle back afterwards. Make sure we call you or email you. Make sure all your questions are answered. So we're going to go ahead and get started. I'm going to introduce Robert here, but before we do that, just as a reminder, this is our university series. We have this session today. We have another one next week. And when you go to our website, aegiseasy.com, we have our prior quarters university series, which is on wildfire risks. We're going to do these for you every quarter, make sure that we, educate you a little bit more about our products, our systems, and help you as the agent be better at what you do. So with that being said, I'm going to go ahead and hand it over to Robert.
Thanks, Ed. Appreciate that. And, this university series is a great opportunity to just dive a little bit deeper into a particular topic. And we figured after the wildfire events of last year that dwelling valuation would be a very important topic to talk about. Of course, I had no idea we'd find ourselves with the firestorms we have today. But before we get started, just a word of caution. I need to remind everybody, I think sometimes it's good to pause and remember this, that insurance really is a risk transfer vehicle. And so ultimately, it is up to the insurer to determine how much risk they want to transfer and therefore how much insurance they want to purchase. All of the tools, all of the things we're going to talk about are all intended as guides to help you as you provide your professional advice to your clients and to help your clients then ultimately make the decision about how much insurance they want to purchase. There's beyond the dwelling valuation tool that we'll talk about, there's also additional optional coverages and things that we provide, and we'll touch on that a little bit later as we get through this presentation. And it's also good to remind your clients that it is their responsibility not only to get the right information to you, but also legally is their responsibility to accurately disclose all material facts to you. And so, as good a job as you guys all do in providing your professional advice, it is limited somewhat by the information and the data that your clients provide you, and I think it's probably good to remind them of that. But again, ultimately, armed with all of that advice that you provide, ultimately it is your client's decision how much insurance they want to purchase, and they do have the flexibility to make some adjustments in that decision. That said, I'll move on into the topic of the day. Obviously, when you talk about estimating replacement costs for dwellings, there's a couple of key things that put pressure on those values to increase over time. Number one has to be inflation, always present, always there, changing over time. And the graph that you see in the middle of the screen in front of you shows you the average U.S. inflation rate per year going all the way back to 1956. If you average all of that out, it's about 3%, just a hair over 3% since 1956. In fact, if you take out the two abnormally high spikes in the 70s, and I think the second one was around 1981, the average inflation rate all the way back to 1956 is 3.01%. This century, it's running slightly below 3%. Year-to-date, 2018, it's running about 2.4%. So it does fluctuate up and down. The tool that we put in place to help your clients keep in step with inflation is an inflation guard endorsement. We apply that for free automatically to every DP3 and HO3 policy that we write. It provides a 3% annual adjustment to the coverage in the policy. And one important thing to note, I know that inflation guard type endorsements are somewhat common, which is a good thing because you do need to keep in step with inflation. Some of them run off an index and they adjust every year a different amount that they apply to the policies. Ours is a static 3% because we feel pretty comfortable in the numbers since it goes all the way back to 1956 that an average of 3% will keep you in step. But the other key thing about our endorsement is it adjusts not only your coverage A limit, but your coverages B, C, and D, which is your other structures, contents, and loss of use. And that's important because when you originally bind that policy, those coverage limits are typically set by most carriers as a factor or percentage off your coverage A limit. And so over time, if you're only adjusting your coverage A limit, your other structures, your contents, your loss of use coverages could be out of step with inflationary pressures. And of course, come at time of loss, they're definitely subject to those pressures. So you want to make sure that all of the coverages in the policy are keeping step. Our endorsement does automatically adjust coverages A, B, C, and D for you. Obviously, in a dwelling fire, it depends on whether you have the C. So that's inflation. The other key item that, as Ed alluded to, that provides pressure on those dwelling values is demand surge. And these are articles I snipped from various newspapers from the fires that occurred late last year, the Thomas Lilac Creek fires down south, the Tubbs, Atlas, Mendocino fires up in Northern California. Tubbs was the huge one in Santa Rosa that I'm sure we all heard about. And what you're seeing on the screen are some excerpts from those articles about concerns that, a lot of folks maybe were underinsured, the amount of stress that put on the insureds to deal with that. And I know the client at the time they're buying the policy always obviously wants to pay the lowest premium they can, but it's just so important to make sure that they have adequate coverage so that if there's a loss, they don't have that type of stress, where then they discover they've got an underinsured scenario where they don't have enough coverage B or loss of use. And obviously all of these fires last year, this year that are going on right now are putting pressure on the capacity of the industry. It's important for your insureds to maintain that coverage. And you've got regulatory pressures. And you see an article that Ed put up there from North Bay Insurance Journal. And as you recall, last year, the insurance department put a little pressure on the industry to make sure that a certain amount of your coverage C, your contents coverage, was provided without requiring an inventory when you had these wildfire scenarios. Aegis Security Insurance Company, which is our carrier, did in fact step up and provide the majority of that coverage without requiring an inventory. We only required it to get to that final upper limit. And the reason for that, just so you know, is because if you think about it, your coverage C limit is really the only HO3 limit that has no validation at the time you buy the policy. Everything else goes through some sort of a dwelling valuation estimation process or something. Coverage C is typically just a number, and you type in the number or you take the default quote setting and move forward. So it's not uncommon, obviously, for a carrier to want some sort of documentation to validate it. That said, there were a few carriers that dug in their heels and said, no, even in a wildfire, we're going to require an inventory for all of it. The department published their names. We were happy we weren't part of that group. We intend to do that again this year with the fires that are going on right now. We'll be providing a big chunk of our loss of use and contents coverage just right up front. So talk about inflation and demand surge and what puts pressure on it. Let's talk about just dwelling valuation in general. First of all, we are insuring the reconstruction cost of the structure. We are not insuring the market value of the structure. The cost to rebuild is the materials, the labor, the permits, taxes, fees, all of that, everything associated with just rebuilding the structure, putting it back in the position it was prior to the event. There's inflation guard that helps you keep in pace with inflation, and then extended replacement cost, which is the ERC, which is really designed to help you deal with things like demand surge. If you put those two together, you've got your client in a pretty good position. Our HO3 product, by way of reference, I mentioned it does include the inflation guard. It also includes 25% extended replacement cost automatically, and there's an option to increase that if you want. So keep in mind that insurance will rebuild the home, not sell it. And it is illegal for the lender to require your client to get more insurance than is necessary to actually reconstruct the home. And unfortunately, we see that all too often where we get requests because the loan was X amount and they want the insurance to be to that same amount, but the loan is dealing with the market value of the property. And we can't insure the market value. It's not an insurable item, just like the land that it sits on, which is what's driving that market value. What we can insure is the structure. And so I put on the screen for you at the bottom the California Civil Code, and it is a specific statute in California that does state that the lender cannot require that the client buy more coverage than the amount necessary to meet their estimated replacement value of the home. So if you ever need that code section, there it is for you. Broker requirements are a little bit unique here in California. There's a couple of things to be aware of. First of all, the code says there's only 4 different types of people that can provide an estimated replacement value to your customer, and that's an insurer, a licensed agent or broker like yourselves, a contractor, or an architect. If you are in the licensed insurance agent and broker category, there is an educational requirement that's additionally imposed. And you've probably all done this already. Before you estimate a replacement cost of a home, you have to take a 3-hour course. It's a one-time deal, a continuing education course. It's a pretty straightforward class, but it is another requirement in California. And then the third item that's a requirement, again, on you as a licensed professional in California is the documentation. So once you get licensed and you take the course, then you can estimate a replacement value and give it to your client. But when you estimate it and provide that estimate, there are regulations that specify certain elements that must be contained within that estimate. If you use the 360 value tool we have embedded, and when you bind the policy, you'll get that 360 value report. It meets all of the requirements. So if you use that, you're good to go. If you want to provide your own value, which is an option for you, you can do that. Just make sure that the documentation you provide meets those requirements. So now I'm going to switch gears into 360 value. And you know, one of the things that occurred to us is that we spent a lot of time talking to Verus about what goes into the 360 value tool, and ultimately an evaluation of that and other tools is why we selected it. But we haven't had an opportunity to really share all of that with you so you understand why we selected that tool and what impressed us about it. And so we want to spend a little time talking about the tool itself and what goes into it. First thing is 360 value has a bunch of different modules that come with it. And there's the basic 1 to 4 family or manufactured / mobile home dwelling valuation tools. And if you use this with other carriers, that's the basic module everybody's going to have. We also, though, spend money to license additional data elements that are fed into the tool that include some roof data. There's a virtual inspection. There's some property-specific pre-fills of data, and there's a new smart source tool that goes along with that, which we'll touch on as well. So it's a pretty comprehensive package of modules that we've licensed together, and they're all seamlessly integrated when you use it. All this stuff is running in the back end. Now, the way the tool essentially works is you put in the address, and you can see the various home characteristics on the top left that you put in. Most of those we actually, because of the pre-fill tool, we provide that data for you. So when you go into the tool after you've given us the address, that's all filled in. You don't have to do any data entry or type it in. You can just look at it, see if that looks good to you or looks accurate, and then continue on. You do have the opportunity to manipulate it, and Ed is going to show you that here in a little bit. But what happens on the back end is essentially 360 value builds a virtual home, deconstructs that home into all the various rooms and components, and then each of those components, it breaks down into all of the things that are needed. And you can see in the blue box the level of detail it goes into. It'll take a room and determine how much drywall, how many drywall screws, how much drywall compound, how much drywall tape, how much carpeting, carpet tacks, you name it. Every little detail in terms of the material. It'll also look at the trades that are needed, your plumbing, your HVAC contractors, your roofing contractors, your general contractor, the labor rates for those in that area, and it will, based on all of that, it will come up with how much it thinks it will cost to rebuild that home. So it's very granular in terms of the level of detail that it gets into. A lot of the factors that the tool, that Verus tracks for the tool that influence it, supply and demand, and general inflationary factors that we talked about, changes in commodity prices and new building materials and techniques that can change the pricing, and of course catastrophes and demand surge. And I mentioned that last because I know after the fires last year, a number of you had questions about the 360 value tool and whether it was keeping step and continuing to provide accurate replacement values. And I'm actually going to show you a case study specific to one of the fires from last year and show you how it performed, and hopefully that will help you. 360 Value is a national tool, and it tracks these changes here broken down at the state level. And this is a little bit dated. I think this is July of 2016 to July of last year. The changes in all of the reconstruction costs kind of amalgamated together. You can see California is kind of in the middle of the pack in terms of how much the dwelling valuation or dwelling replacement costs increase out here. But the tool actually gets much more granular than by the state level. There are 468 markets across the U.S. and Canada. So all the major metropolitan areas, and then it gets even more granular than that, are considered different markets. And in each of those areas, the Veris folks are looking at all of those building costs data and updating the tool regularly. So they're looking at contractors and adjusters, how much the labor costs, how much the material and supplies and the equipment you need to build a house costs, what the contractor rates are. They do pricing surveys. They look at claims estimates. They do a lot of detailed updates of all of the pricing. And these are updated typically quarterly on the underwriting side, and some of the claims data is monthly, and those are regularly updated into the 360 Value tool. What's really neat about 360 Value is, in addition to just building costs, if you will, all the stuff we talked about on the last slide, the folks that built 360 Value, the first thing they built was actually Xactimate. The original company that built 360 Value was called Xactware. Xactware was bought by ISO, and then ISO was bought by Veris. But Xactimate is a claims estimating tool, and it is widely used in the industry, and it is also used here at Aegis Security. Because they are related, the folks at Xactware, once they built Xactimate on the back end, they thought, hey, we can build something to help estimate dwelling values on the front end. And what's neat about 360 Value is it's the only tool I'm aware of that, in addition to all the building cost data, it is also fed regularly with actual claims data in the area where that home that you're insuring is located. So it has a feedback loop, and I kind of like the symmetry of the estimate we are coming up with up front in terms of the estimated replacement cost of a home is linked not only to the cost of the materials and labor in the area where that home is, but it's also linked to actual loss data from the home in the back area, and it's tied into, in fact, the estimating tool that we use on the back end. So that's kind of a neat component to 360 Value. A lot of the key characteristics that are regularly updated, and some of these are done more frequently than monthly. You can see key items that go into and influence the estimated dwelling valuation. And you'll see when we jump into the Veris tool, these are kind of the top items that show up on the screen, and they will have some pre-fill data in them. And Ed will show you how you can identify if you're using the default pre-fill data or if you're overriding it, which you're allowed to do. But those are some of the key items. One of the things that goes with the pre-fill and the smart source that we license is updating these factors regularly for you.
And we did have a question that just came in, and it did ask, what about upgrades that are done on a home? So, and whether or not you can change those. So once we get to the actual 360 replacement, I'll show you that we do have some default information that is sent in, but you can go in and down to the bathroom, down to the kitchen, what type of countertop. You can modify all of that information based on you and your client's information and what you receive from them and what you know was done to the house. If it does not exactly match the pre-fill information that was sent through Veris.
And Veris has a great tool for just saying, hey, you upgraded a bathroom, and Ed will show you that. It's fantastic.
Absolutely.
This is just a chart showing you some of the changes in these key cost matrices over time and how much they can change. And of course, they're all being tracked separately and then updated into the 360 Value tool on a very regular basis. Another item that we license into the 360 Value tool is a virtual inspection. What's nice about it is it's right there in the tool, so you can, and Ed will show you how it works. You can not only kind of look at the home, a map of where it is and a photo of it, you can adjust some things about the home to make sure you got the quality grade right. I know a lot of times it's nice to jump into like a Zillow or Realtor or Redfin and look at the homes, and I do recommend doing that, especially if the home was recently sold. You can a lot of times get more recent data about it. But this is a convenience tool, the 360 virtual inspection, because it's right there and can help you out. We do license roof age data, as I mentioned earlier, and what's neat about that is one of the things that can really change on a home, and it just does affect the coverages that we provide as well as the rate for the policy, is whether the roof has been updated or rebuilt and what type of materials on it. And so what we did is we licensed some additional roof data that comes from county records, from local construction records, and there's a whole algorithm confidence score behind it. And so we can tell whether we have pretty good confidence or pretty low confidence that the roof was updated, when it was updated, what material was put on it. And in fact, if we have good confidence and we know it was replaced, we can automatically apply a replacement roof credit, and we don't even ask you for any additional documentation because we know it was done. If we have low confidence and you indicate it's a new roof, we might ask you for some sort of a receipt to verify that. But most of the time, especially because the county records are pretty complete in the state of California, we have pretty good confidence in the roof age data, so we also pre-fill that for you.
And if at any time, for example, if they just bought the home and they know that they put a new roof on it, you have documentation of that within the last few weeks that has not been submitted to county records, you can always override that and put in 2018. You will be asked to submit that proof, so please make sure that you do that at the point of sale. Now, we do have another question come in. I'm going to go ahead and read it. And Robert, regarding coverage A, what if the insured only wants to cover the mortgage balance, which is much lower than the replacement cost?
So our program requirements require that you insure the home to 100% of the estimated replacement cost. And there's a couple reasons behind it, but one of the main ones is you have to have actuarial soundness in the rating plan. And if you're knowingly underinsuring the home, it changes the dynamics of the loss probabilities associated with that risk and how much limits you're going to pay out. And it throws your rating plan into a little bit of a tizzy, to use a technical term. So we do require that it be that you insure it to 100% of the estimated replacement cost.
Great, thank you, Robert. Does the underinsured penalty apply?
There is a co-insurance clause if you are more than 80% underinsured. And one of the things, well, I'm going to get ahead of myself. Yeah. I'm going to talk about under and overinsurance and how we evaluate it in just a minute. Yeah. So I'll circle back to that. But yes, there is that clause. Smart Source, I mentioned, is a new function that comes with when you subscribe for the pre-fill data in 360 Value, which we do. And what it does is it's basically like putting some machine learning on top of the pre-fill data. So 360 is keeping track of every time users override the pre-fill data and update it, and it's keeping track of what the override or update was. And it's then going out and kicking off additional localized surveys if need be on the back end, and it's learning from all of the overrides whether it has confidence in the overrides, and if so, it will automatically start to update its pre-fill data, and then they'll verify it on the back end. So in other words, as you use that, if there is a sudden, say, demand surge in an area, and you are now overriding the values regularly, the system will learn from that, and it will update itself, and then get verified on the back end. So before we jump into the demonstration that Ed's going to show you, just bear in mind a lot of these extra items, the roof data, the Smart Source, the pre-fill, those are not necessarily always included with all of the instances of 360 Value that you see. So depending what carrier you're interfacing with, particularly the roof data, you might want to check with them on how they're getting that data. If they're licensing it through Verisk on the back end, it's going to come with all of the confidence scoring and data that I mentioned. If they're not, if they're just using the default like the year the home was built, then there's really nothing behind it. They're just simply saying set it to the year it was built and leaving it to you to ascertain that information. So just be cognizant that there are, every instance of 360 Value is not necessarily the same.
All right, thank you so much, Robert. I'm going to go ahead and dive in here just a second into our website. First of all, for those of you that are not aware of our website, aegiseasy.com. This is for you, the producer. You can log into this website. Just go to aegiseasy.com. You will see here product guides, producer resources, and log into our portal directly from here. So what I'm going to go ahead and do is I'm going to do an example here of a quote and kind of play with the 360 itself, start with the default information, modify it based on, as you can see, this address Zillow up here. We'll look at the photos of the house and talk a little bit about it. So let me go ahead and log in here for a second. And again, thank you for everybody logging in today. Keep the questions coming. If we, again, happen to miss it, we will definitely circle back and make sure that we have that answered for you. All right, oops, let's log in here. So what I'm going to do, I'm just going to choose, I chose a home here in LA. I'm going to go ahead and do a quick quote. We'll talk briefly about the two different pages that we're going to go through. So first of all, zip code. And we're going to go ahead and do an HO3 quote today, new quote. All right, we're going to go ahead and put in the insurer's information, test, that's a great name today. Birthday, now we always, as a reminder, want to make sure that you do get the correct name, birthday, and address. Those three factors do run the loss history as you move forward through the quote, so please try to collect the correct information and birthday. All right, the address here, I'm just going to go ahead and put in the street address as I already put in the zip code, tab, tab, tab. It's going to validate the address for us. You see right here, use this address. It's going to fill in the city and the county, and then it's going to ask you what is the condition of the roof. Now, throughout our quoting process, we have these little black eyes next to a lot of information. If you run your mouse over it, it's going to go ahead and tell you kind of what we're looking for in these fill-in boxes. So in this one, we're going to go ahead and state excellent. There's three factors that go into how we cover the roof itself: the condition, the age, and what type of roof that it is. So those three factors go into exactly if they're going to get replacement cost, ACV, or fire and lightning only. So please make sure you discuss that with the client if you haven't gone out and seen the home or seen photos of it. Is a very important factor there as well. So with this information, you just hit continue. It's going to take us right into the 360 replacement tool. Here we go. It's going to roll right into it. You'll see once it comes up, we have the year built, 1920, square feet, 1146, and all of this other information is pre-filled here for you. Now, as you see here, we have these little pins. As you can see, they're very small right there. When the pin is placed next to that information, you can feel confident that that is the actual house data that's being applied and pulled in for this house itself. If it does not have a pin, as you can see, just an empty box here, that's letting you know that it's pulling in general information for that area. So what I'm going to do, just as a lot of agents do, just go in straight here and hit calculate. So I didn't touch anything, didn't modify anything, and you've got a replacement cost come up of $204,000 right there. So now what I'm going to do, I'm going to go ahead and hit edit first of all, and then we'll jump over here to the photos of the house. So you'll see here is the house that we're looking at today. Let's have a bigger photo there. Now when we go back into the 360 valuation and look at the virtual inspection, you'll see here that the information that comes up, we have the map view and the overview. In the overview, it looks like the house, this map data is from 2018, is pink. So when we look at the photos, we are assuming that within the last probably month or two, they did some modifications to this house. So if you see, in a lot of scenarios, you're also going to get a street view, but maybe Google did not drive by this house and get a street view. So you get an overview and then the map view of it. So we'll go ahead and close that and scroll down and look at some of this information where you can see the quality grade that's default is standard. And if we look at the quality wizard, you click on that and say, for standard, you're going to get these images of a home right there. If you look at the house itself, let's say, does it look like these houses that are in the images? Let's go through some of the interior as well. So you'll see that it is, definitely remodeled. We got hardwood floors. We have updated kitchen. Let's get over to the kitchen here. You'll see that is definitely not the original kitchen. We'll go through some more of the pictures as well and look at the flooring. You can see the bathroom. That bathroom was updated right here. That's definitely an updated bathroom. I don't know about the color choices of the house, but it is definitely an updated house from what we originally get that's pulled over from it. So if we go back into our estimator, we could say the countertops are definitely not standard. Maybe they're a little bit above average and slightly custom. As you can see, some of these materials match what was in there. Interior finishes, if you slide this one over, the standard has carpet. If you slide it over a little bit more, now we've got some hardwood. As you can see again, we've got the hardwood in this photo here. Exterior finishes, when we slide past here, if we go above average, that's probably a step above what we're seeing in the images of the house. If we look at the actual general shape and style standard, if we go above average again, it might be a little bit too much, so we'll keep that as standard. Now, what the system has done for us is to say, well, we recommend that we change this to above average. So you click above average, and then it's going to move that information over here for you. So now you've got a quality grade of above average, and over here the original pre-fill was standard. Now, if that's all that you do and just hit calculate, you'll see what it does, excuse me, to the replacement cost. So from 204 to 237. But if you say, you know what, let me continue to look through this a little bit more, let's go ahead and dig a little bit deeper into the 360. So we can scroll down and look at the kitchen. So we'll say here that, again, no pin is here. So let's go more detail. And again, what defaulted to it is the quality adjustment has not been upgraded. So we can basically just click on quality adjustment, hit upgraded, come down to the counter, solid surface. Maybe we've got some domestic or imported granite. We'll just go ahead and change that and hit submit. All right, and then the bathroom. So again, this is pinned to the 2-bathroom, which it is, but let's look at the details of those bathrooms. Again, no quality adjustment for either of those bathrooms. And from what I could tell, it looks like they both have been upgraded, so I'll go ahead and change that. Let's change that as well. And then once we do that, hit submit. So now we'll scroll down and hit calculate. So we started at 204. We've done a few modifications to it. Now we're at 285. So to really dig into this replacement tool, it helps you understand. It's important to understand when upgrades are done to the home that you're going through the 360, looking at it in great detail, and having a good conversation with your client so they understand that you're aware of what's been done to the house. You can also, let's back into this one more time. You hit edit to get back in. We'll scroll down here again. Again, this has a, let's show you this here. There is no garage that is attached. So you'll see here, let's go through the end. So there is the detached garage there. So here under garage, you can see it says none. So there is no attached garage, which would then apply to the separate structures under this risk. You can also, if you wanted to add additional features, you can open this up. And let's say you wanted to add some dwelling coverage. It's at 285. You wanted to add another 15,000. Go down, add dwelling, count one, amount, let's just say 15,000, and hit calculate. So you can even add some additional dwelling coverage right within the 360 value. We always recommend that you do it that way because it does have all the other applied factors inside the quote, and now we're at 304. So let's just go ahead and close it here. It's going to take that information, put it back into the quote here. Now, at any time, just to let you guys know, you can always provide your own value. So if you click that button, it's going to override and empty out that entire page. You can go ahead and put in that information. Let's say you wanted to have 350,000 exactly. You can do that as well. But we always recommend that you utilize the 360 tool to get that replacement cost because you can go from 204, as you can see, to 304 with just some tweaks based on the information that you have on the home. All righty, with that, let's go ahead. I'm going to bounce back over to Robert here, and we'll continue on.
Great, thanks, Ed. And do bear in mind that if you use that 360 value tool and you want to change the value, we do have you go back into 360 to do that. But the reason is at the end, when you bind that policy, the dwelling valuation estimate is going to match to the coverage limit that's in the policy, and the documentation you provide to your client is going to comply with the regulatory requirements that you have to meet. If you do the provide your own value, you do need to make sure that whatever you do in terms of documentation that you give to your client, that it matches to the regulatory requirements. Question was asked earlier about the underinsurance clause, and our policy does have the standard 80% co-insurance clause, so that if the home is more than 80% underinsured, the insured can essentially participate with us in any loss that occurs. And so what we do on the back end is we evaluate every home we insure using the 360 value tool, whether you provide your own value or not. And we do that to be very consistent as a carrier, that we are always evaluating them. We do look to see if we think that they may be underinsured or overinsured. We have a threshold, so if they're more than 30% overinsured or more than 20% underinsured, and the reason it's 20% on the underinsured is to match up with that co-insurance clause. If either of those conditions exist, we will send a notice of possible over or underinsurance to your client. There's no action required. It is strictly an advisory notice. It simply says that you requested coverage in the amount of X. Our evaluation says maybe it would be Y, you may just want to talk to your broker or talk to a contractor to make sure you got the right amount of coverage. The reason we do that, I think it's pretty easy to understand why regulators have an interest in carriers doing that on the underinsured side of it. But we also have on an audit to verify that the overinsured side that we aren't somehow knowingly bilking policyholders out of extra money by allowing them to just buy more coverage than they'll ever be able to access. And so we do have to provide and show the department in an audit that we provide a notice of over or under insurance, and that's why we do that. We're not trying to second guess what you and your client are doing. It's strictly an advisory notice. But like I said, you have to be more than 30% overinsured to even trigger that notice. Anything short of that, no notice goes out. Last, I mentioned a case study. So we're going to look, and I know this came up because of conversations I've had with a number of you over the last several months. After the fires that occurred late last year, and I'm sure it'll happen again, the fires that are occurring right now, there was concern as to whether the dwelling valuation estimates when you were doing a quote were keeping step with the coverage that a client would actually need in the event of a loss. So we did a case study, and we went to a neighborhood that's in Coffey Park, and in fact, Jenna placed this court right next to the actual Coffey Park in Santa Rosa. 23 homes are in that shape that we circled there, including the 2 at the beginning of the cul-de-sac, and unfortunately, this is what that neighborhood looked like after the Tubbs fire burned through in October of last year. All 23 homes in that cul-de-sac, and as you can see, in fact, all the homes around it were completely destroyed by the fire. We were able to go back and get loss data through our carrier for 16 of the homes, and you can see I kind of grayed out a couple of the homes that we don't have loss data, so those are part of our study. And then what we did is we said, well, let's look at providing a quote, essentially, on those homes using all of the default settings in both 360 value as well as the default settings in our quoting platform. In other words, defaulting your coverage A through the 360 value tool, and then your coverage B, C, and D percentages. Of course, we include the 25% extended replacement cost as well. We added all those coverages up to get a TIV, or total insured value, and we compared those values to the actual loss data for those homes in that neighborhood. And on average, the total TIV was 9% higher than the reported total loss amounts. As I mentioned, we include 25% extended replacement costs. So one of the things I consider, and it's probably the most cost-effective thing you could do for your clients, if they're concerned or you're concerned about the dwelling valuation being enough, we do provide an option to increase the extended replacement cost to 50%. It's a very small charge to do it. And if you had done that on these particular homes, then your average total insured value was 22% higher than the reported total loss amounts. If you want to go beyond that, you can maximize other structures if that's necessary. Again, I would only do that, though, if they actually have larger structures, because we're not just going to stack the limits and add that. Of course, they have to have other structures that are damaged. You could look at contents coverage, and the big one to me that I highlighted in there is loss of use. So after you adjust extended replacement cost up, and you also maybe adjusted the dwelling amount in the 360 value tool, then the third thing I would do is consider the loss of use coverage and perhaps increasing that. If you in fact maxed out everything we had, then every home had way more than enough coverage compared to the total loss amounts in there. So that's an actual case study from October of last year. Once we have data, we'll probably do that again with losses that unfortunately occurred in the Reading area, but it'll take some time to get all the loss data. But I thought that would be helpful to see how the tool performs on quotes performed today in a neighborhood that was in fact destroyed last year, and where we have loss data. So to sum this all up and put a bow tie on it, key points to remember. First of all, you are not required to use the 360 value tool. We provide it because as we looked into all of the things that go into that tool, and we looked into competitive tools that are also out there as well, we really liked this tool. We liked all the data that goes into estimating the building costs, and we liked the fact that it also is supplemented with actual loss data from a system that we in fact use. But you're not required to do it. You can definitely provide your own value, and you have that option in going through the quote process. Bear in mind that we are insuring the reconstruction costs. We are not talking about market value. So if a lender is giving you a hard time about the loan amount, you've got that civil code now, you can hit them with that and say, look, all the insurance company can do is insure the estimated replacement cost. They can't insure market value. and you can't require your client to get insurance for the market value. We're looking at all of the rebuilding costs, everything associated with materials, labor, construction, permits, taxes, fees, debris removal, demand surge, and that's where you've got inflation guard, and you've also got extended replacement costs to help that coverage keep step over time. Do consider that extended replacement cost after you've manipulated the coverage in 360 value and got it to where you and your client are happy with it. Then you can also think about additional extended replacement cost value. And again, we use that 360 value tool because we have a lot of confidence in how well it is updated and maintained. Obviously, it can be off. There are going to be instances where it might be too low. There's going to be instances where it might be too high. And that's why we give you all the pre-fill data, but we also give you the ability to, as you interview your client, to manipulate the data in there. But again, ultimately, at the end of the day, even though all of this is provided and wrapped into our quoting process, ultimately it is up to your client to provide you all of the data necessary to provide an accurate estimate and then to make the decision about what they want to purchase after you present those options to them. So that's it. I hope this was helpful. I hope this deeper look into dwelling valuations and the tools we provide is beneficial. We appreciate you taking your time with us this morning. Appreciate any feedback, not only questions now, but any other thoughts of topics maybe that we didn't cover you'd like more on, please let us know. We're here for you. Thank you.
Thank you, everybody, and we will stay online here for a few more minutes if you do have any questions that want to come through here at the last few moments. We did get a few questions asking for a recorded copy of this series. We will put this recorded copy on our website. If you would like a copy of this as well, please let us know and we can make sure to get you a copy of that. So again, we will stay online here for a few minutes. I want to thank everybody for taking time out of their day. If you have any additional staff that would like to attend this live event, we are hosting it again next Wednesday. It is, excuse me, you will get an email notification of that as well. And again, thank you so much, and you guys have a great day.